Yeah.
No, I mean, because I know you guys had like worked together before, with the internet stuff, and he was helping you out. But yeah, our deepest condolences. So I guess what's new with you, man? I guess besides that, like, what else has been going on? Because I know you've been working really hard with helping guys with crypto. You're one of the few accountants that like deals with people on crypto.
Yeah.
Not many accountants even touch that because of obviously how new it is and how people might say, "Oh shit, this is very volatile." But well, what's new with you in general?
So, it's basically putting my head down, after almost 2 years of trying to deal with my son's case and trying to keep my, everything with the business going. I was dealing with the guys, Charlie and Miguel, was dealing with them for like a few quarters. They had those courses that they're doing. I think they're still doing them.
Yeah.
I think they were on your show, guys, I think like last month or something. They were on there. And so basically, I was teaching in there. I was doing a few tax segments in their courses as well. And then, just basically the market kind of cooled off. 2023, 2024 wasn't too crazy with crypto. Kind of cooled off a little bit.
Until
and then
Trump came back in.
Now Trump's back in. Trump's a big crypto guy, big proponent. It's going to do the Bitcoin reserve and, Ethereum and Ripple and everything. So I think, this year is
Can you explain to the audience like what that means and what that means for the future of like taxes and...
So now, on the way over, I was kind of updating myself on the IRS, and what they're doing is the Operation Hidden Treasure. So Operation Hidden Treasure basically started in 2022, and what the IRS is doing, because a lot of these guys, they're kind of like they go against the grain with they're not like they're trying to develop a monetary way of exchanging goods and services. It's called crypto. It's basically, it's hidden. So you don't know who the owner of that crypto is. And you do these transactions on chain. So the IRS in 2022 started the Operation Hidden Treasure, which I talked about that in the past. But they, since then, they've, I think they've audited a few thousand people. They've recovered maybe like $12 million in people that didn't report their gains. But what they're doing is they're doing a ton of on-chain analysis. So they have tools, they have AI that they're implementing. They're training people on trying to track down where basically people who are not complying with crypto and reporting it every year. It's going to get basically more sophisticated, and they're going to have better tools to track these people. So they're going after the big fish now. They're kind of just data collecting right now. So I think a lot of these people right now, they're thinking, I didn't report my crypto for the past 2 or 3 years, and essentially,
and this is obviously only when they took it out, right?
So what do you mean, like when they offboard? No, it's just when you're doing like flipping crypto on an exchange. Yeah, whenever you flip, like if I flip Ethereum for Ripple, there's a cost basis to when I bought that Ethereum, and there's a the price of when I sold it and traded it for let's say Ripple.
And so that is a taxable event.
Anytime you're flipping coins, it's a taxable event. Yeah.
So you're telling me all the guys went to Puerto Rico to kind of like just avoid all this stuff?
Well, those guys are good because if they did it, if they started their crypto portfolios, after they got to the island and then they became a resident of the Puerto Rico, then all their gains basically are tax free.
Wow.
Yeah. So I mean that's huge, and that's one of the things in Puerto Rico that that's very attractive. That the economy, the government there, did to attract a lot of investment and stuff like that. But the problem with that is now you have these people coming in with a lot of money and they're buying up the real estate there and they're driving up the prices, similar to what they did like in Florida with COVID.
Yeah.
Yeah.
Which you guys can attest to. But so that's becoming now a problem where a lot of people now on the island that are native there, that were born there and maybe been there, their family's been there for generations, are now leaving there and come to the States because, there's not a lot of economic opportunity. The real estate there is too high for them now. And so there's that part of it. So it's kind of like a touchy issue there.
Yeah. What about guys that made the money or crypto wallets here in America and they want to move to Puerto Rico after the fact?
So that what happens is now the date that you move and you become a resident of Puerto Rico, then you have to basically that crypto that you had in the States prior to that is going to be subject to the U.S. jurisdiction for taxes.
Oh, wow.
Yeah.
Okay. So Trump's in office now. Things are looking better for most people. Wink, wink. Let's say the future tariffs, taxes, even business owners. Is that a good thing for us moving forward, the taxes?
So I was going to tell you, we're going to talk about, so the IRS is, Trump is talking about abolishing the IRS, right? So So now we're talking about now we have things as the government has to, fund every year, right? We have to fund Medicare, we have to fund Social Security, Medicaid, defense spending, all of that stuff had to be funded by revenue from the Internal Revenue Service. So taxes, 50% of the income that the government makes to fund this comes from individual people like you and I. That when we report our taxes, basically, 1.5 trillion of that is collected through individuals, and there's like 1.2, I think, is from like payroll taxes. So like, everybody says, oh, companies don't pay, corporations don't pay taxes. They do actually, because they're hiring people and they pay people W-2 wages, and then they have to kick in taxes. So, for there's called the employer portion and the employee portion of taxes for payroll. So the corporations have to kick in employment taxes. So basically that takes care of about $3 trillion. And then, there's tariffs is only like, I think maybe 300 billion. Tariffs only collect like maybe 300 billion. So it's only like 2% across the board. So you would have to increase tariffs on all goods coming into the United States to close to about 60% to make up the difference if you abolish the IRS and got rid of all the revenue that the IRS is collecting every year.
Oh, shit.
So that means what? You're going to basically Walmart becomes
You're
Whole Foods.
Nothing, yeah.
Well, yeah, it's like it's like Walmart's Whole Foods overnight.
Yeah.
So everything's going to be expensive. So we're dealing with that, and then essentially, I think it's kind of like he's using it more of a strategy to deal with other countries to get us a better deal. Basically in trade, right? I think everybody
and to incentivize business owners here to not import stuff.
Correct.
Because a lot of Democrats criticize the tariffs. They're like, hey, this actually is going to lead to more inflation, but the purpose is for it to stave off people importing stuff. Which, yes, they're going to pass that price price adjustment and increase to the consumer, but the incentive here is to basically get them to start sourcing locally instead.
Correct. And then, also we got Apple coming in. We got the chip maker and the biggest company that makes the chips.
Yeah.
And Taiwan's coming. They're doing like 600 billion, I think. Japan committed to 1 trillion to invest in the United States for manufacturing. Apple, we said it was 500 billion, and then there's a couple, so I think they said total it's like 3 trillion right now of investment of companies coming in so they can avoid the tariffs. And it's basically, and then they're going to get.
So that's good.
Correct, and then they're also going to get better.
If you look
tax.
at the tariff itself, it sucks, but people don't understand all the positives that come from it. It's a domino effect.
Right. We got to run the country like a business. That's why I appreciate the way it's being handled. And you got like Elon Musk, and you could say what you want about him, but they're running it like a business, and that's the way the government should be run.
Yeah, getting rid of bloat and everything else.
Yeah,
that's chronic of the government.
Yeah, because we got a $2 trillion dollar deficit every year. Just the interest payments that the government pays every year is $900 billion, basically $1 trillion every year, just in interest only payments.
Yeah. That's crazy.
We're spending $6.5 trillion. 1 trillion of that is
interest.
I mean, if you ran your household like that, I mean, it's
cooked.
Yeah, no business would be in business if they ran it like that. It's just ridiculous. You're bringing in $4.5 trillion, and then you're spending $6.5.
But the government doesn't have to be efficient, and that's why they've been able to do this dumb shit for so long.
And also, you know where the money's going.
Yeah, where's that?
Oh, it's going to Israel. We know that.
A lot of it is
going to wars, man.
We know a lot of it is going to Israel.
Yeah, man. But
and Ukraine.
And Ukraine and everywhere else.
Yeah. But not here. To the homeless in LA.
So, guys, the number calling to the show, you get a chance to talk to Steve. Our accountant, 646-490-0394. Again, that's number 646-490-0394. Is there anything else that you wanted to talk about as far as
well, the big thing to mention right now is so not many people know this, so I'm just going to say it's the 2017 Jobs Tax Act cut. Basically lowered taxes across the board on a lot of areas in the standard deduction, in the tax rates, basically like 2% across the board. Even the amount of income where, because we have a graduated tax system. So even the highest level of tax right now, it doesn't, like the 37% tax rate doesn't kick in until you make over 600,000, right? So if this year those all expire. It's called sunset. They sunset in 2025. So right now, I think the administration is trying to get those renewed because basically it's going to raise everybody's taxes about 2.5% across the board. Basically the level of income is going to go down to once you make over 400,000, you're going to get killed. That's what we had prior to 2017.
So anything over 400,000, which puts you typically in the top 1% or top. I think 500K is top 1%. But either way, you'll be in the top 2% with 400K a year. So you're going to pretty much get killed at that point.
Right.
Would it be fair to say, Steve, once you start making $400,000 a year or more, you need to start really seriously looking at real estate? I mean, to kind of cut back on that tax liability.
Yeah, we talked about this before. I think real estate is probably of my client base. If I take a demographic of it, and we know this to be a true fact is they're the most wealthy. They're the ones towards the end of their when they're done working, whatever, cash out properties. They have money that they can liquidate that and live off of it. Basically, even the rental income if they still have those properties, they're maintaining them or they have somebody running it for them.